Afternoon and happy holidays, everybody. Hope you're enjoying the holiday season. Only a week away from Christmas. It's crazy to say that, but I hope that you are enjoying this time of the year and ready to put this crazy 2020 behind us. Hopefully, getting some of the holiday shopping done. I think I just wrapped up over the weekend, even though I just realized it was time. I just got to get the gifts for the puppies now. So, anyways, hope everybody's having a good holiday season and. One heads up is that next week we'll probably do this a little earlier just because it will be Christmas Eve, but we will still be here again next week as well, just to catch up. There's gonna be a lot going on next week too, so I want to make sure to share with you what's going on. This week has been pretty wild. Looking back to just yesterday, Wednesday, we had some not so good information come out. We had retail sales that came out actually down 0.9%. It's been a little while since we've seen that, so this is a little concerning. And then we actually had the Fed come on again yesterday. Fed Chair Powell shared his thoughts on what's going on. There's no changes, there's no plans to make any adjustments or anything like that. But I think what was interesting, what came out of all this discussion was that finally, Jay Powell even said something about inflation. He had mentioned that, what was the term that he used? Basically that the pandemic had shown some signs of inflation, or is leading to some sort of inflationary pressure or something along those lines. So I thought this was very interesting. Just to be clear, it's probably not the pandemic that has caused that, but all the asset purchasing and all the stuff that has been going on. But it's interesting to see them recognize that now. And I'm not sure what data point they're looking at specifically. Maybe they're digging in a little bit like we've talked about before. But coming next week, we actually see inflation numbers. So maybe there's something that will come out there that shows it. I don't really expect that. I think that the government measure of inflation isn't necessarily going to reflect what we all are feeling. But it is very interesting to see the Fed actually talking about inflation now. Interesting kind of stat. I bear with me a little bit. I don't know the exact number off the top of my head, but it's something like 25% that the money supply has grown in this past year alone. So, of course, that leads to inflation, right? If we had, I'm just making up numbers here, but if we had, $1 million out there of money supply, or think about you as an investor, if you have $1 million and overnight or in a year, all of a sudden you have $1,250,000. You got a little more purchasing power, right? You may spend a little bit more. You may be able to enjoy a little bit more. And so think about that as the money supply. All of a sudden, 25% of all the money in the economy, we've grown by 25% just in a year like that. So very interesting and something to really pay attention to. I don't expect that inflation is going to get out of control, but I do think that we'll continue to see inflation as we move forward into 2021 and, maybe a couple of years down the road too. Another thing that Powell had mentioned, which was very interesting, was he had said something about PE ratios being high, but that it's really not a concern because of interest rates. I thought this was really something to grab onto. The Fed, first off, doesn't really, they shouldn't really be paying too much attention to the markets. That is not their driver. It's more around the economy, jobs, inflation, that kind of thing. But it's really interesting, for those who follow us, you've probably heard me talk about this, that PE ratios, an expensive stock, can really be that way when we have these low interest rates. And so I think that's why we keep seeing these markets go. We're here again on Thursday, the 17th, back near all-time highs again. Now I think we're kind of in this range, and it'll be interesting to see what happens in the next day or coming weeks. But, it's interesting to hear that from the Fed. Let's put it that way. So, the biggest concern, I think, when we talk about the Fed and all this interest rates and that they're not really doing anything different, they're still going to keep buying assets, is it's going to be very difficult with this long history now of continuing down this path for them to unwind this stuff. When they finally do announce that they're preparing to change that, the market's going to throw a little bit of a fit. And so it'll be very interesting to see how that all pans out and what the Fed does to say that they're no longer buying assets, or they're slowing their asset buying, or they're raising rates, or whatever comes next. So really pay attention to that. Don't expect it for a while based on everything they're saying, but the longer that they wait and the longer they push that off, the more impactful it might be down the road. Moving forward into today, we had initial jobless claims come out. We had 885,000 jobs lost. So it's not good. This is 2 weeks in a row now where we've had a little higher than expected job losses. And, obviously it's an impact of the shutdowns. We're kind of going back into more restrictions, and obviously that's impacting a lot of businesses and therefore the jobs that they can provide. So, hopefully this vaccine gets out there quickly, gets out there effectively, and hopefully we can get back to some sort of normalcy sooner than expected. Personally, I think it's going to take a while till, we see some sort of normal again, even with that vaccine out there. But who knows? Hopefully, my fingers are crossed, it comes out better than expected. And then, this week was really interesting as well. We had a lot of focus on big tech. On Tuesday, the EU announced some really heavy restrictions on the big tech companies. And then just today, Thursday, there was another lawsuit on Google. So, it's just very interesting to see that big tech is obviously a huge focus right now for regulation and legal battles and all the above. So pay attention to that moving forward. I think it's a common place for the government right now. Red, blue doesn't matter. It seems like that's a focal point for regulations. So keep an eye on that. Next week, we've got quite a bit. We've got GDP, income, spending, and I mentioned Powell earlier, so inflation numbers are also coming out here next week. And in the meantime, keep an eye on the stimulus talks. If anybody follows the markets, that's probably been what you've heard most about. For the past week or so, that has been the biggest talking point in the media is, when will we get a stimulus deal? What will it look like? All the above. Today, it seems like we're getting closer and closer, so it's very possible we see something come out here soon, but that's been said before too. So we'll see what happens, but pay attention to that. If the stimulus package is bigger than expected, we might see a quick jump in the markets, right? All this spending is kind of like that injection in the arm that we've talked about before. So if there is another stimulus package and it's bigger than expected, we might see the markets jump in anticipation of kind of a short-term solution, right? All right, we'll move into the question of the week, and we had a really good one this time from a call. So the question was, and by the way, if you have any questions yourself, you can feel free to email us, info@mainsailfg.com. So anything on your mind, whether it's market related, planning, whatever it might be, shoot us an email, and we'd be happy to answer your question in our weekly updates. Question of the week this time was about somebody who had taken money out of their retirement plan. So they had taken just about $100,000 out of their retirement plan. And the question is, what can I do? Am I stuck? By the way, they're below 59.5. So right now, if they can't do anything about it, they're going to be forced to pay taxes and penalties on that distribution. So the question is, what can I do? Right? How can I maybe get this back into the system or do whatever I can to minimize that tax and penalty bill that may be on the horizon? So there's a couple of things to look at. If you find yourself in this position, there's something called the 60-day rule. So if you are able to take this money out and then put the money back in to the same retirement vehicle within a 60-day period, or a similar retirement vehicle, I should say, you can actually kind of count that as a rollover in a way. And so you may be able to actually minimize that impact from that perspective. But again, you've got to catch it pretty quick. It's got to be in a 60-day period, and I believe it's got to be like done and settled in that period. The second thing to consider is, because we are still in 2020, barely, you may remember something called the CARES Act passed. This was kind of like the first wave of the stimulus and stuff to deal with coronavirus. Part of that allowed you to take out a certain amount from your 401ks or retirement plans, penalty and income tax free, as long as you paid it back over a period of time. So typically you have to specify that when you take the distribution, but that might be something worth looking at too, is that possibly you would be able to claim it, under the CARES Act. Now it needs to be in relationship to some sort of coronavirus related expense or something you can claim impacted you from the coronavirus. But if so, you've got this period of time where you can pay that back without the taxes and penalties associated as well. So I thought that was really relevant, especially as we get closer to the year end. There's so much, like right now, we are really busy with our clients on tax planning and some year end stuff to make sure we're being as thorough as we can. So it's a good example of something that, that may come up for a lot of you as well. So we'll wrap up there. Thank you guys so much for joining us. As always, again, if you have any questions, you can email us info@mainsailfg.com. Especially if you have some questions on the question of the week, we'd love to kind of field some of that here in our weekly updates. Again, we'll be back next Thursday. It will be at 1 instead of 3, but we'll still be here. And in the meantime, enjoy the holiday season and stay warm, and we will see you next Thursday.